Welcome back, everybody who's with me in the valley of pain of being invested in Chinese equities. And this is one of the major reasons for it. At least you possibly heard about this narrative out there in the media that the Chinese economy is not doing well, Chinese consumer is not doing well. There's a confidence issue because of the fact that the Chinese real estate is down. And obviously you heard about the issues with Evergrande and so on, and home prices that are going down and down. And so I want to quickly address this, not as an expert in this area. I'm not saying that I'm caring too much about the Chinese real estate, to be honest. Don't take this as an expert opinion, but how I'm personally thinking about this, and maybe there's a takeaway that you can use in your research and investing, and just compare it with what else you've seen out there. So we actually had some quite fresh news regarding this matter, because recently China or Chinese equities sold off based on the news that there was a minus 0.4, I think that's percentages drop in China newly built house prices year over year. So when this is negative, it's showing you that the house prices are going down each year over the course of the next year and so on. And I highlighted here in red where we are currently versus 2015. Why 2015? Because this is the media post that we got from Bloomberg for this matter, which was China home prices fall the most since 2015 as downturn persists. So what we got here is a news based on this, in my point of view, quite tiny drop in year over year, right? It's just a couple of percentage points. And yes, it's true. Since 2020, house prices have been falling steadily. So we get these continuous negative headlines around house prices. And I would have to look like how much they are down in each of the first tiers, second tiers, and so on. But I don't know about the country where you live currently, but aren't house prices down currently pretty much everywhere? I just know about Germany that we have, I think, a 20 to 30% haircut on house prices. I think they actually will go lower even after that, but who knows? From the relative peak, of course, during the COVID bubble, all of the assets have been inflated. And now it's coming down in the West, mainly because interest rates are going up. But in China, due to these so-called deflationary measures and some policy changes, because China actually does want to deleverage in some aspects. And that's creating a whole lot of issues, which are systemic issues, some parts, and some serious issues like with Evergrande and the suppliers, and some trust issues and so on on the consumer side for newly built homes. However, I just get the feeling that some of these media takes here are somewhat overly exaggerated compared to when you actually look at the data, because that doesn't look as abysmal as it has been in 2015 when it comes to also the severity of how fast these drops have happened and how deep they have gone where we are right now. But that's just to give you a little bit of a perspective. Maybe I'm wrong on that, and then please correct me in the comments section here. But I do just generally think that this is an issue that could possibly be fixed. And I think there's one video that I'd like to show you now regarding this matter. That is, I think, by Matthews Asia, so also similar to GrainShares, KWeb. It's a fund specifically for Chinese equities, and they held this webinar, and I thought this might be very interesting.
The confidence problem is also reflected in China's real estate market. As you probably know, 85% of China's new home sales is sold on a pre-sale basis, usually 18 to 24 months before the construction is finished. But home buyers are not buying new homes because of worries that developers won't deliver, since many developers have failed to meet their contractual obligations over the last 2 years. Fear of non-delivery is a key reason why in 25 largest cities, new home sales on a square meter basis declined 28% during the first 3 quarters of last year compared to the same period of 2019. But in those cities, sales of existing homes on a square meter basis were 13% higher than the same period in 2019. The national combined sales, which include both new home sales and secondary market sales, were stronger than a year ago, according to a senior government official. So that's why we believe there's still decent demand for property, but buyers just now prefer existing homes because of two reasons. One is just, as I said, the lack of confidence in developers, many of whom are in financial distress. The second reason is they can get a better discount in the secondary market.
So basically, this shows you that the main issue here is in the newly built houses, and with those property developers which are now getting into some liquidity issues. I said before on my channel here that I do think that the Chinese government might bail out individual companies if it's getting really to a systemic risk, but if it's not the case, then I don't expect any help, funnily, from a communist country in comparison to most of the capitalist countries where we bail out most of our big companies when they are in trouble. So it seems like China is not really bailing out them as of now. But I think the video also has shown us that there is a way for the Chinese government to really fix the property sector, especially in this area of newly built houses, which is they could basically create a state fund that is kind of as an escrow service between the buyer and the developer, where usually they would make a down payment and then they start building, and then they will transfer the building when it's finished and they will pay the rest of the sum. This model, after the defaults, has some serious confidence and trust issues, but could be easily fixed if the government comes in between and says, well, we are going to guarantee for your deposit, and to the developer, we're going to guarantee that we will make the payment if everything's going all right. So basically just have a trusted party in between, similar to actually what Alibaba with Alipay has been doing in the e-commerce sector to also get rid of such trust issues. We also have similar things in the West with PayPal, and we have also seen in some sort of real estate crises in the United States similar things happening where the state comes in and takes over some of the risk issues there. And if that were the case, we could also see improvements in the newly built house pricing and also the demand side here of things, and quickly lead to a recovery. However, I would also say that maybe we are just thinking too much about this whole real estate sector, because yes, of course, this is a systemic issue that it's a big part of the Chinese savings, while they also have lots of cash in the bank, as I'm going to talk about in a second. And also, unfortunately, the fact that they are not investing a lot yet in the stock market, which I'm hoping this will improve long term, and where we're now currently seeing that the Chinese government is starting to take the stock market more seriously, as the indices in Shanghai, in Shenzhen and Hong Kong have come down so much that it's even already creating problems with the real economy in some sort of the sentiment. But that would actually be a huge opportunity for Chinese savers if they would now start buying their own companies at these low valuations. But what's missing here is the government vehicle for it. There's not so much like a 401k yet in China as they have in the United States. But I do think in the long run, this all will be established, and there will be more mandatory saving also into the stock market from the employer side, for example, with different new regulations and so on. But I just want to finish it up here with this positive note here, that the Chinese households actually have 19 trillion in savings. So there's actually quite a few substantial savings in the bank accounts of Chinese consumers, and they could go out and spend it already today, not only related to whether or not their house prices are currently maybe going through a more difficult time and there's no growth in there. I would kind of question this whole narrative that people are not going to spend currently because of the real estate issues that I've just talked about. But it seems like that finally the Chinese government is waking up. It's starting to support the stock market, which we just got the news last week that they are buying billions with actually overseas funds, which I think is a great initiative. But I think they should make it more structurally and let more flow of even the normal pensioners, normal workers flow into the stock market continuously. You know, not only relying on real estate as a savings pot, but also having the stock market and also the cash savings at the side as three different pots of long-term wealth creation here. So let's hope we see more of such support and measures also in the real estate market. As I just pointed out, I think in my personal opinion, this can be fixed and will be fixed. Let me know in the comments how you think this is currently really affecting consumers and our stocks and the sentiment towards Chinese equities. Thanks for watching and see you in my next video.